Hello, how are you? Good weekend. Vladimir Ribakov here from Traders Academy Club. And this video is the weekly Forex forecast and analysis for the week starting on 26th of April to the 1st of May. If you are new to this channel, so first of all, welcome to the community. I would like to invite you to subscribe to the channel. Just follow the subscribe button below the video. Please remember to enable the notifications so you are notified when there is a new content available for you. As well, I would like to invite you to join our completely free Telegram channel and to join the live trading rooms where we are going on daily basis and doing live market analysis to analyze all the most interesting instruments we are looking to trade, which you also receive in trading report, which I'll show today. You can find both links to join right below this video in the description or in the comment section in the pinned comment. What we will do right now is to review the previous week forecast. The text version of that is available for you in my blog, and the text version for this video would be prepared by Monday and will be shared with you also in the blog or in the social channels. So what you have to do is just come back to the video, and in the description or the comments you would find the link to that, or come directly to the blog vladimirribakov.com, and you would find this post prepared for you by Monday. The idea here is a written text version for the forecast, so you can always come back and refer to that as a reminder of what I explained in the video. Please note this video and the text version is completely free for you. It's from me to the community. I hope you find it useful and helpful and educational. If you do, then please show your support back. Hit the like button, drop some feedback in the comment section. Your help is very much appreciated and of course helps a lot to the channel. And I would like to thank you in advance for your help. As well, keep in mind that this is completely free for the community, open for the community, so feel free to share with anyone who you would want. Again, I hope it helps and you find it useful. So let's take a look what the market had for us this week, and this week was brutal. We saw for the first time since I don't know how long the oil crashing so fast and reaching unbelievable levels in the negative zone. So basically you were paid to get the oil contracts due to the shortage of storage. There is no place to to store everything. So you were actually paid to get that in your hands. Unbelievable days. But not sure we will see that repeating, and we will see how it goes. So these are the instruments we were talking on the previous week, and let's go over them, and I will share also the new ones I have for the coming week. First ones, we were following the European pairs. The Euro Pound, we wanted to see a false breakout, a convergence, and ideally climb of higher highs, higher lows to define the bullish trend is here. Now let's take a look on the Euro Pound, and this is where we got the well, it wasn't the classical false breakout, right, but it was a whole of the supportive area with a bullish divergence, higher highs, and that's where we wanted to see it forming higher highs, higher lows to start some rally. Short term, long term, it will be too early to decide. So we wanted to see how it goes. And that's how it goes. Instead of having the 3 higher highs, higher lows, we only got 2. As tempting as it is, normally, that's not enough. And the whole idea here is, how do we know it's not enough? When we start to see contraversions, contradicted signs. How? When the bearish trend definition for our instance, that's the lower highs, lower lows, started to show off, and that's what started to happen. Despite the rally, the momentum immediately changed, and we saw the pair creating the lower highs and the lower lows. This is a warning sign, and that's for me immediately the situation where I say, okay, that's not an instrument I want to deal with. So as simple as that, Euro Pound is removed from the list. EURCAD, we're looking to see the break of the trend line, which happened the week before, and we were going to lower time frame to define higher highs, higher lows, which we got. And the idea was simple. We wanted to break above this trend line, right, to get the ABCD completed. Or further on, to start and develop a new trend by making 3 higher highs, higher lows. So the invalidation was very clear if we, instead of breaking through the trend line, get the 3 lower highs, 3 lower lows. So what happened with this pair? Here we are. So it was holding the beautiful level, which we got. We never managed to get the 3 lower highs, lower lows. And instead of that, as we wanted to see, we broke above the trend line. Now, this is normally a good momentum sign. And I say normally because there are no guarantees in market ever. And that triggered us into this plan. And we completed the 2 waves rally, which later on ended by divergence on the moving average of the MACD on the 1 hour chart, as well as on the 4 hour chart right here. That's a place where the market tells us stop and let's see how it develops. And basically the idea for the longer term was not the 1 hour to create the higher highs, higher lows, but the 4 hour to create higher lows. So we know the trend goes to longer term and not just the short term. This was missing. We never got it. Therefore, this divergence was assigned to game over. And the break of this trend line basically puts an X on this pair currently. What is next with this pair? We have too many options currently. Personally, I'm still after the buys, but I would definitely want to see better signs for that. So as for now, the EURCAD is neutral. And let's continue. Next one was the Aussie Kiwi. And we got that going, and basically the idea was here, creation of the third leg. Let me explain. Okay, from the weekly time frame and the monthly even, we got a bullish divergence. We expect the reversal. Daily chart was creating extreme divergence right here. We expected to see corrective cycle ABCD or a beginning of a new trend, right? If it is the beginning of the new trend, we required third high. So our plan was on the 4 hour chart, get the retraces and look for the buys. And that's exactly what this pair delivered to us. So the biggest question now is what's next? So that's what the daily we wanted to see, and this is what the daily now is forming. Okay, third high. So the way I see that, we should be slowing down. This is a massive area, as you can see here, and slightly higher. Massive area of key resistances from the past. If we check the Bollinger Bands, we can see also a Bollinger Band duplicated area. Slow down with continuing divergence here. Okay, and that, from my point of view, is the sign that on these levels we should, assuming we will see the bulls running out, we should start and see evidences for bearish movement, at least on the short term. And the way I see that for a bigger scale is this. So around this zone I marked here, I would be looking for bearish evidences. What do bearish evidences look like normally? False breakouts, bearish convergences, the trend change after false breakout, like 3 lower highs. All that are signs that we have a possibility for a trend change. Okay, at least, as I said, on this scale, until we are back to the longer term buys. So from my point of view, if you are involved in the buys from the plan shared previous week, if you got your setups inside and you are riding here, this is a very important zone to pay attention to and consider management. If it's cash out, if it's partial cash out, if it's trailing your protections, for the advanced of you, hedging with other instruments to make sure you are not exposed to any randomness, and so on and so on. There are many ways to do that, and everybody has his own strategy, so I'm not going to dig into that. That's my plan for the Aussie Kiwi. I would expect this third leg to start and slowly slow down and create evidences for a correction lower. A very interesting fact also on the Aussie Kiwi here is if we take a look on the statistical highs and lows, then we have, as you can see, two very interesting days to pay attention to: 29 and then 5 and 7. Basically, very, very important period. End of the month and slightly the beginning of the month. That slightly after the beginning of the month. Sorry, 5, 7. That's the dates. These are the times we statistically and backwards see many times a top forming, and I would definitely be paying attention to these days. Okay. So let's go back then to the list, and the next one we had was the CAD yen, with the idea of the 4-hour chart, create that correction and make the move down. Now we wanted to go through and below this bigger range to start and develop the momentum with the daily bearish hit and divergence. So here we are. Let's put the levels here. So that's the longer term triangle. We went through that on this mini correction we were facing here. And now look what happens with this pair. We got the lower highs, lower lows, 3 lower highs, lower lows, which is the definition for a bearish trend. And the idea here remains looking for bearish continuation. Now all that remains relevant as long as we don't see suddenly some straight move through 61.8 that would invalidate the setup. So the ideal thing is let this rally happen, which currently do, and on the lower time frame start to see again return to the bearish momentum. How? By creating a bearish trend definition. What defines a bearish trend? Lower highs, lower lows. Because if there is no momentum and there are no lower highs, lower lows, the market tells you what? That the bears are not ready to take the control. And if you see something like that, why would you fight the market? Right? That's basically the hints the market give us on the go. We have our plan, we have our analysis. If the market follows and create a momentum, fantastic. That means your analysis is correct. But if the market does not do that, that simply tells the story that maybe your analysis is wrong, or maybe the estimation for a move was too early. Step back, do the homework again, put some effort, analyze again, and see. Maybe there was something missed. Well, that's kind of the hints, and the majority of times the market provides us. Okay? And it's our obligation as traders to be able and listen to these things the market tells us, and to make the right actions. To close the eyes to the reality and just say it will be fine is not smart. Okay? It will be fine normally doesn't end too fine. So that's for the CAD yen. My bearish view remains on as for now, and at least as long as we are holding this breakout, right, of this range, and we are below the 61.8, so we don't suddenly get bullish trend definition. My view remains bearish, and I would not be surprised to see the CAD yen continue lower until the daily would complete some good divergence here. So let's see what if the market agrees with us or not. That's at least the analysis I have. Of course, I might be wrong, but that's the way I see that, and that's my expectation from this pair. The next one, Aussie CAD. We are also riding the buys here. Pretty impressive move for those of you who follow my analysis and my work. You know that we are bullish after the first triple double here. Okay, with this bullish signs. That was great opportunity, which turned to be correct. And the rally here is, you see yourself. It's super impressive. So the question is, what's next? We did not really get any opportunities after correction zone. So the plan from the previous week remains on. Retraces are accepted and should provide opportunities for further rally. The way I see that, we still should face something like that. And as long as the 61.8, the dynamic 61.8 of the 4-hour chart. Why dynamic? Because if new highs are created, then the Fibonacci goes higher. As long as we hold the 61.8 of this dynamic second leg, retraces with bullish evidences, I would be looking at them as opportunities for bullish trades. Again, very important that once you spot these evidences, like false breakouts, bullish divergences, after the correction, higher highs, higher lows again to gain momentum, always important to use your strategies. Estimate your risk, estimate your rewards, and see if it fits in your strategy. Right? It will make no sense to risk, for example, 200 pips to earn 50 pips, right? Doesn't make sense. So you want to make sure you have the room to earn more than your risk, and it fits in your strategy. You have your clear plan for what validates it and what invalidates it, right? And then consider your actions. That's how I see with the Aussie CAD. I like it, and from my point of view, it's one of the better analyzed trades from the higher time frames. If that holds this way, we might take a look. Take a look why I like it. Okay, we might be exposed here to something massive this way, or even if we go and make it a triple cycle count, doesn't really matter. The divergence is available in both scenarios, and it's pretty amazing. If that is correct for the long term, that's what we should be exposed to. So let's see. That's why I like this pair so much, and that's why my view is bullish here. Next one. No, that was not in the plan. Okay, before I go to the commodities, let's take a look on some more interesting opportunities we had from the market. So for that, let's take a look on a trading report from Traders Academy Club. As I mentioned before, we are making a daily live market analysis. That's how it looks like. We choose the most interesting instruments based on multi-time frame analysis, and that's what we follow. And one of these pairs we followed this week was Pound New Zealand. And I wanted to explain and to give my estimation here. Of course, for all those of you from Traders Academy Club who are already involved, then you just do your management, of course. But those who are not involved, then let's discuss about this pair. The way I see that, I might be wrong, the read here is very tricky, but this is a triple cycle from the weekly chart with a very massive hold, spiking through, but very massive hold around the psychological 210. The daily chart had this ending bullish divergence for us on the moving averages, and also on this part with this moving average and the convergence idea. So I believe we are heading here into two waves correction, or at least, like this, into some sort of zigzagging correction. This or other way around, the way I see that, and again, I might be wrong, but the way I see that, we are under bearish pressure. Here is what we wanted to see by the market. The first leg, assuming we're developing this, each of these leg to be cycled by itself. So the idea here is basically like the first leg, as you can see, created the trending structure. So I want to see the same on the second leg. That's why the sell the rallies was the idea, and we're expecting to see bearish trend. And one of the greatest way I love to see the price action follows is, as you already know, and if you are just new to the channel, so you will know now, is, as I explained on other pairs, gaining the momentum. What does gaining the momentum mean? By creation of trend definition. Very simple logic, without any complex. Okay, what is the definition of a bearish trend? Lower highs, lower lows, right? 3 of them, at least. What is the definition of bullish trend? 3 higher highs, higher lows. So as long as the plan you have, the analysis you have, and the price movement follows each other, are synchronized, lined up, that means the market agrees with your analysis, and maybe it's right. So as long as this is the scenario, you might be looking for your opportunities to trade. If the market disagrees and does not gain the momentum, that's your time to step back and say, okay, maybe it's best to step back and to reanalyze. Maybe there was somewhere a mistake. Okay? So my analysis from the longer time frame, as I just showed you, was bearish. And the way I wanted to see that going is developing the trending structure, which it did. It reached a very important level here, which I call normally a clearance zone, but you can look here, it's a massive key resistance zone. What else did we have here? It's a Bollinger Band duplication, another analyzing tool I love to use. Duplicated Bollinger Bands. Levels, and mainly the best of course is the bearish divergence. So what did we get here was the lower highs, lower lows, 2 waves retrace, those 3 waves down, ABCD correction, bearish divergence. That's what I want to see from the lower time frame when it is synchronized in my higher time frame analysis. That's where we got a beautiful reversal on the candles, and we got a great red candle here. The pattern name doesn't matter, okay, because it could be looked as a pin bar, potential dark cloud, some would call it different names. It doesn't matter really. What matters is we complete a false breakout over this high, false breakout with the clearance zone, basically cleaning, and we end up with a divergence. So we get a red candle and a verification candle, one more lower candle to close below the first candle low. All these together adds up in the long-term analysis, and this is a great sell. So what is next with this pair? As long as, first of all, here it's a bullish divergence, right? So for all those of you who are involved, this is a great place to apply management. Any sort of management that works with your strategies. Partial cash outs, full cash out, trailing protections, partial hedge, and so on and so on. Every strategy has its own rules for management. But when you start to see signs against, it's time to be careful. So does that mean the bearish pressure is over? Now let's take, for that to be answered, let's go to the weekly chart. Does anything change on the weekly? No. Anything change on the daily? No. What do we need to pay attention to this 4-hour chart? Because if it is a bearish trend, we need to see what? Lower highs, lower lows. We do have the lower highs, but we do not yet have lower lows. And we want it to be created. If it is not created, then look what happens here. This becomes just as possible ABCD correction of this leg and potential bigger scale of an ABCD here with the pink view, right? If that happens, that's a way from the market to tell us, no go. But as long as it did not complete, the expectations are bearish. And that's why we will need to see lower highs created and then retraces and further lower highs, lower lows. Of course, if the 4-hour chart does that, the 1-hour chart would haven't created on each of the legs. Okay, so we would want basically the 4-hour chart lower highs, lower lows, and the 1-hour chart would have to create it, of course. And if any one of these is missing, that's your time to pay attention to the warning signs. And that could be the warning signs. Okay, the divergence we have here on the histogram and the bigger scale divergence on the moving average. So I wanted to show this example how important is the synchronization on the multi-time frame analysis. The multi-time frame giving you the same direction. Now I use cycles and divergences. That's not the only method to work with. Many traders use Elliott waves, others Wolf waves, other Gann waves, other theories with trending structures, trending patterns, harmonic patterns, moving average, and so on and so on. Everybody has its own style. There is no better or worse. There is one that the trader feels more comfortable with. For me, the best analyzing methods is the combination of cycles, which measure the waves in trends based on Fibonacci, with combination of divergences and convergences. When I see that on the multi-time frame, that's where I'm looking for my opportunities. And that's why, as I showed you before, what I deliver on my trading reports inside Traders Academy Club is based on that exactly. Analyzing the market, choosing the instruments day after day, finding the ones that are the most interesting, and that time being in terms of technical analysis. Why? Because I believe that the instruments that are synchronized on multi-time frames has better chances to deliver us better trading opportunities. Okay? The moment the synchronization is lost, this instrument I don't want to be involved with. Like I showed you before, right? The Euro Pound, the EURCAD, for example, right? So that's why I wanted to show the Pound Kiwi, and it could be a very interesting one, because if it does gain this momentum that I was explaining by making the higher highs, higher lows, it might be a beginning of a deep correction. And deep correction on this sort of cycle could deliver, and could deliver big. Okay, so we should go and follow how it looks like. The next one on the list, which I want to add to our follow-up, is the pound dollar. And the way I see that, with the bullish bounce here on the moving averages from the weekly time frame, and the bullish bounce on the potential bullish divergence on the monthly. The daily is coming out of the extreme, delivering what could be a first leg of a bigger uptrend. Now, for that to happen, 4-hour chart would have to be trending structure on the lower time frame, which is a 4-hour chart, and it is. And now the idea we want to see is buy after the corrections. As long as we are holding 61.8 of sudden straight down, right? And the ideal scenario is ABCD correction, and that would be the one I would want to see happening. So that's the clearance zone we have currently on this pair. What I would want to see is the ABCD. I assume this is the A, this is the B, and that's the C. If we complete the move towards the D, making this area to be clean, that means breaking down and reversing. Here I would want to see a bullish divergence. And if I see this bullish divergence, the next step is get the ABCD breakout and the lower time frame to gain momentum by returning to bullish definition. What is the bullish definition? The way I see that, 3 higher highs, 3 higher lows. If we got that, fantastic opportunity in play. And that's another pair I add to the watch list. Now, from the previous report, coffee, we wanted to look for bullish opportunities as long as we are holding the ABCD. Let's take a look where we stand with the coffee. We got the ABCD here, kind of bigger scale, right? And we're here holding the rally of the daily. So the biggest question is what's going to happen here. And here is why I dislike the current scenario. For me, there should be a bullish divergence, which already is impossible as we are going and making lower lows. So despite the ABCD, there is no divergence in play. And because of that, I do not have the synchronization of the cycle, the waves analysis, and the divergences. And when I face something like that, for me, it's a sign to step back. And that's why in coffee, I go neutral. Next one on our list was the S&P, where we wanted to break the trend line and get 3 lower highs and lower lows. So let's take a look, where do we stand with that. The trend line is broken, but the lower highs, lower lows is missing. So we got that on the 1 hour chart, right? The lower highs, lower lows, which back then looks very promising. Like, okay, there might be the opportunity. But what changes afterwards is a contradiction sign we get by making higher highs, higher lows. That's a contradiction. And in contradictions, we must be careful. So what is next with this one? There is 2 options. Because of the 3 higher highs, higher lows, that's a possibility of another leg, which we currently are facing. That might potentially just increase the ABCD like this. And if that is still the lower highs, lower lows, and just bigger ABCD, we will want to see here the divergence created and holding, breaking below this trend line, and guess what? Gain the momentum. How do we gain the momentum? By making the lower highs, lower lows. We got it, we are good to go. Exactly like I showed you, for example, with the pound Kiwi before, right? That's the follow-up of the price I want to see. So there is the analysis, there is the plan, and the last step is to make sure the market follows. If the market does, that tells you there is a good chance your analysis is correct. If the market doesn't, it's a red bulb for you as a trader to step back, stop for a second, and check out. Maybe the analysis was wrong. Maybe something was missed. We all do mistakes. We cannot avoid wrong reading. It's impossible to read everything 100% perfect. So step back, reanalyze. Maybe there was something missing, or maybe simply the market tells you that there are no buyers or sellers. And then you better check your opportunities on other instruments. So that's what I would want to see on the S&P, because if that doesn't happen, I would not be surprised if we start to go to a new high until whatever the next scenario on the market would be. Okay? Personally, I do not see any reasons to be involved. I don't see anything good happening in the economy besides a flow of Federal Reserve money. To trade on thin air money, to me, doesn't make sense. Yes, I know I miss these buys opportunities on the go, but I cannot be involved in something that I don't feel comfortable with. So if my analysis does not deliver me the opportunities of the bearish momentum I want to see, my position is always neutral. So that's what we have for the coming week. As you can see, let's quickly review. We have many nice opportunities that are playing. Australian pairs, Aussie Kiwi, AUDCAD. We have the pound New Zealand we discussed, pound dollar we discussed, CAD yen, and many more. What do I have for this week? the oil is back to interesting zones. That's what I'm going to cover in the live trading rooms this week, and that's where I will do my live trading analysis, live market analysis. If you like the way I analyze and the way I prepare, I invite you to join the Traders Academy Club. You can find the link below this video in the description. Or do I have the link here? No. You can just follow up the description below the video, okay? And that's what we will follow. So we have a list of instruments we currently work with. Oil is going back on our list. Natural gas, some other indices. We are riding the, also, what is our crypto? We are riding the Ethereum versus the Bitcoin to the upside. And what else planned for this week? The Aussie dollar, some New Zealand pair on the list. I'm watching to see if we will get clear price action there, and more and more. So let's see what the market will deliver to us. Again, I love to see fully synchronized instruments. If I find them, that's where I'm looking for my opportunities. Okay, and when I find them, you get them in my daily videos and trading reports. So that's pretty much it for this week. Thank you very much for your time watching this video. I hope, as always, you find it useful, educational, and helpful. Feel free to share it with anyone you want. It's completely free to the community. And I hope to see you with us in the Traders Academy Club. Until then, I wish you stay safe, be well, and my best wishes to you and yours, to all those of you who are in the Ramadan. Then safe fasting, stay well, and best wishes to everybody around you. See you soon. Yours, Vladimir Ribakov.